So, hello everyone. How is everyone doing?
Hello, sir. Good evening.
Yeah, good evening, Pooja. How are you, Sakshi? Himanshu? So let's just wait for another minute. If anybody wants to join, he can join, and we can quickly start with the session then. Okay, so yes, just want to check if I'm audible to you guys. Is there a double
Yes,
echo?
audible.
Sorry. So, so first of all, let me just apologize that we have changed the timing of the class for today because there was kind of a medical emergency in the morning. So that's why the class timing got changed. This is only for today. Effective next Sunday, we would be having our regular timings. So just my apologies for that part. So in the previous session, we discussed about the budgeting concepts, right? And see, I mean, what the point is that in FMAA or like a pre-CMA, what you need to understand is how the things are going to work at a broader level. And then once you enroll for a CMA, you can always have a deep dive into the concepts and uh, can can go like more deeper into the concepts. So let's quickly revise what we did. So whosoever is into CMA right now, who has enrolled for CMA or who has already given part 2. So let me just brief you on that the budgeting concept, the budgeting and the, the control concept in this module is basically covered in part 1 of the CMA exercise. Okay, so whosoever is like giving part 2, so as of now this concept is not that relevant for an immediate exam, but then this would be covered in your part 1. That is something which I just wanted to clarify. So let me just share my screen, and there are a few important things which we need to sorry discuss. Yes. So yes. So for your budgetary part, if you understand it this way, that there are two concepts which you need to like get it thorough. First is regarding how a budget is built, and the second is regarding theoretical aspect of the chapter. So if I can show you quickly what I mean by that is, for cracking your exam, what kind of an approach you should follow, because this is going to cover your 20% of your marks. right? So for this one, just give me a moment. Yes. We did brush up a few concepts in the last class, but then I would like to go a bit more deeper into the MCQs and some kind of practical questions today. Okay. So what we can do is we can quickly go through the concepts which we discussed, and then we can move to the MCQ aspect of it. Okay. So let me just share my iPad for you guys. So, just give me a moment, guys, to allow myself to share. Yes. So overall, in this budgeting concepts, we can divide a chapter into multiple categories, and those categories are the relationship between planning, budgeting, and performance evaluation. What are the advantages of budgeting? Features, process of budget, and types of budget, and stages of budget. So this stages of budget would have most of your practical questions involved. So this is something which you need to be very strong on. And then all these above concepts which you have are kind of a theoretical thing, wherein there would be a theoretical questions which you might get in your MCQ exams. Okay, most of the things we did discuss during the last class, but then I would just like to brush up a few things so that we don't miss out. So when a budget is made, it is all about planning. So we always make a budget to make sure that we don't end up spending more than what we are supposed to. That's why we require a planning. You plan for an event and then you budget the cost, so that you also have a fair bit of an idea how much funds or how much costs or how much expenses you are supposed to make. That's when a budgeting comes into play. And then there is something called performance evaluation. So once you plan, once you budget, and then the third step is performance evaluation of what has happened. And as I already mentioned in the last class, from here there's another topic which basically triggers, is called as variance analysis. So that is kind of a separate concept, moving into the marginal costing and other aspects of it, but that's how it is linked. We did discuss some advantages of budgets as well. So the advantages of budget included like a proper coordination between the departments, cost savings, and then how do you manage the expenses? You get a fair bit of an idea at the start of starting a project, of starting an event, that what could be your estimated funds which you require. So that is something which gives you an idea. The budget is going to give you an idea for that. It helps in coordination, effectiveness between the departments, and all those points which we discussed. Then budget also has a different time frames. So by time frames, what I mean is that budget could be made for any time frame. So it could be monthly, it could be annual, it could be daily, it could be quarterly, it could be hourly, whatnot. Then there is something called process of budget. When we discussed the process of budget, we discussed that there should be a goal congruence, and the budget should always be a participative budget rather than an authoritative budget. So what do we mean by authoritative versus participative and goal congruence? Is that when you make a budget, you need to understand that you need to collect everybody's opinion and then prepare a budget. You need to make sure that everybody else is also giving their inputs, You make them participants to your budget instead of just pulling the authority. So just to quickly recap on this concept is that if you follow a top-down approach, there is a top-down approach. So the levels of the organization are basically divided into three parts. This is the top level, the middle level, and the lower level. So how the budget should work depends upon what kind of at what organizational level you are making the budget. If you are at a very top level, it would be more of a authoritative budget. But if you are at a lower level, it would be more of a participative budget. So that's how it depends on which organizational level you are working on. So as a middle level person, what the budget you get from the top level would always be authoritative, and the budget which you send at a lower level would always be participative, because you require the groundwork basically is done by the lower level. And what do you mean by goal congruence? Goal congruence is something that we need to align the goals of people. We need to make sure that all the people are aligned to a single goal. And that's what goal congruence is. And that's what you need to make sure that the budget also reflects the same. So if, for example, I tell you that the actual capacity of the plant is to produce 10,000 units daily, come what may, you cannot force the plant or the machinery to produce more than 10,000 because you're already working at a maximum capacity. What if your budget says that we need to produce 12,000 units daily from that machinery? That is not going to happen. So this is something which is not related to your common goal, because what your employees are doing at a lower level is that they are planned, they are familiar with a capacity which is 10,000, and now you're telling them to produce 12,000, which is something against their goal now. So what is going to happen if you give a budget for 12,000 units? The first thing is that the employees would be very discouraged at a lower level, and the second thing is that the machinery might break down immediately. So that is something which we did discuss. Then there are types of budgets which we need to discuss today. We didn't give a lot of time during the previous session here. So that is what there were stages of budget. We discussed some stages of budget. Does anybody remember what are the stages of budget, or what kind of a budget we always start with? Because that is something, if there is a practical question which you're going to get in the exam, it would be on these one of the budgets. Can anybody tell me that which kind of a budget do we always start with? Which is the first budget you prepare?
Sales budget.
Sales budget.
That's the sales budget you prepare, and then you end up having a cash budget at the end. So whatever budgets are prepared in between, for every budget you would have a kind of an MCQ question in place. Okay. And then we need to practice some questions as well. So the only theoretical thing which is kind of left, or which needs to be discussed in a more detailed kind of a thing, is regarding the types of budgets, and then we can move on to the questions. So what is called as annual or master budget? So annual budget is something which is prepared at the start of the year or start of a quarter. So if it is the start of a quarter, it is usually a master budget, and if it is at the start of the year, it is usually called as annual budget. So the word which you need to use depends upon the time frame you guys have, right? And there is something called static budget versus flexible budget. Static budget is something which doesn't change. Static budget is something which doesn't change, whereas flexible budget will change depending upon the output which you are producing. We have a questions on that. Just after this 5-10 minutes, we'll solve one of the questions on that. So just relax on that point. And there is something called zero-based budget. A zero-based budget is something which needs to be started from scratch. So you won't have any kind of previous figures with you. And then once you start a budget from scratch, it would be called as a zero-based budget. Then there is something called as a rolling budget. So how does a rolling budget look? Let's say, for example, you had a budget for 2021, like sales. And there was cost of goods sold. And let's say this was gross profit minus your expenses. And then you've got your net profit. So let's assume that this was a budget format you followed. So what do you mean by annual budget? Is that you decide what is going to happen in the next year and you prepare a budget for 2012. So there would be an estimated figure in front of every category of your profit and loss account. So this is something which is called as the annual budget. So you have estimated something before the start of the year. Before the year starts, you have estimated a few figures. So this is called as annual budget. Or if you're doing it for a quarter, it would be called as a master budget. So master basically means is the head of all the budgets. That is something which you want to achieve at the end. So let's assume that the net profit which you want at after 2012 ends is say 1,000. So that is something which you have already decided. Then there is something called as flexible and static. So what do you mean by static is that based on your estimates, what was the cost per unit you require? And if everything went as per your estimates, what would be the budgeted figures? What would be the budgeted figures against that? So let's say that we have a budget for 2011, we have a budget for 2012, and for the month of say March, based on our original estimates, there would be some costs per unit, there would be some proportion, and if you apply the same proportion equally every month, what is the figure you are getting? So this could be your static budget for the period, and then there would be an actual figure against it in the month of March when March ends. And there is something called as flexible budget. So flexible budget is something that you want the per unit price as per your estimate, and the actual units would be the actual figure. So that's how you multiply both things and you get a separate figure. So that is called as a flexible budget. So there is a difference between a static and a flexible budget. Then there is something called zero-based budget, which I already mentioned that you need to start it from scratch. It is usually beneficial to start these kind of budgets when you're doing like a project costing or kind of a new project is starting up. So you always start a budget from scratch. This usually happens in construction industry, wherein every new building which is being made, they have got a separate budget for that. So that basically gets started from scratch. And then there is something called as rolling budget. So rolling budget is something which just roll forwards the figures of the previous year. So if you made a budget for 2012 based on the figures of 2011. Now you prepare a budget of 2013 based on the figures of 2012. So just roll forward those figures as kind of your budgeted estimates for the next year. Just give me a moment. Okay. So this is what it is regarding the budgeting concepts. But then let's move on to a few questions before we can actually dive deep into the concept actually. So what I'm going to do is I do have a subscription, and let's try to make it a bit of a mock test, as the same way you're going to get in your examinations. Okay. Let me just okay, give me a moment. Why is it working? Yes. So what is going to happen is when you start preparing for your examinations, or when you give your exam, the exam comes in a specific format. Okay, even the CMA exams comes in a specific format. So what we are going to do is we are going to make sure that we follow the same process. Oh, just give me a moment. Where's this? Something's not working. Are you able to see my screen?
Yes, sir.
Yes, sir.
Oh. Just take a bit. Yeah. All right. So let's try to solve some mock questions from this planning and budgeting part. So this is basically your section C, and it has got 121 questions into it. I'm not going to solve all the questions. You might be having your own materials and the other stuff. So just make sure that you try solving those questions. But for this, we'll keep it about 5 to 6 questions for this day, and probably we can solve the other questions later on. So let's pick up a few questions, like 10 questions probably. So this is kind of an actual examination screen. How is it going to appear for you in your Promatric center? So Promatric is one of your agents who delivers or who conducts the exams, and this is the actual screen which is going to you should be having this type of screens with you. And the interface is basically the same. I have given my CMA exams, so I am pretty familiar with this interface. The only difference is that there is a timer right here at the top, which you don't have in the mock test. And then there is this option called flag and all. So you can flag the questions like this if you want to just review it again. So we would solve it right away. Okay. So this covers your planning and budgeting. All of the following are criticisms of a traditional budgeting process, except. So who wants to give it a try? I'm not going to solve any of the questions for you guys. Let's just let me be that fair. So if you want, you can just unmute yourself and give me an answer on that, and then we can discuss in about 5-10 minutes after all the 10 questions are done. So take 2 minutes of your time and tell me what do you think. Anybody wants to give it a try? Doesn't matter if it is wrong. We would be discussing it. So, but just give it a try. So it says all of the following are the criticisms of the traditional budgeting process, except overemphasizes a fixed time horizon such as 1 year, makes across the border cuts when early budget iterations show that planned expenses are too high, incorporates non-financial measures as well as financial measures into its output. It is not used until the end of the budget period to evaluate the performance. Just give it a random try. Then we can have a quick discussion on that. But guys, you need to give it a try. So don't think that way that after the class I would be studying for another 2 hours and then I would be able to crack the exam. Make sure you utilize the time which you have in the class so that you don't have to spend a time later on. So it's better you start answering the questions. Anybody wants to just give it a try? A, B, C, D? No one? Any random try? So the more you solve the MCQ questions, the more probability it is that you're going to clear the exam. You keep on reading the theory, it's good, but that is not going to solve the purpose for you, because you need to get familiar with what type of questions you're getting. Okay, there is some response on the chat. So Pooja says it's C. So let's put it C. Okay, so let's see the answer. That's correct. So what it says is, it is not a criticism of the traditional budgeting process. How it could be a criticism? Because it incorporates the non-financial measures as well as the financial measures. It's incorporating everything. So this is the qualitative and the quantitative factors. So what it says is that it is not a criticism of a traditional budgeting process or a budgeting process or any budgeting control. The budget needs to incorporate non-financial measures into the output. For example, expectations regarding the units to be manufactured and sold in the coming period, number of employees that would be needed, and new products to be introduced. Though non-financial measures will affect the financial items in the budget. So what it means is that when you prepare a budget, it is important for you to consider both the factors. This is an advantage, or this is something which you need to consider. This is not a criticism of it. Okay, what you want is accept. It's saying accept. You don't want a criticism. Okay, and you can always read out these explanations for other options why they were not selected. Let's move on to the second question then. All of the following are disadvantages of authoritative budgeting as opposed to a participatory budgeting. Accept. So all are the disadvantages. So all these are the disadvantages. There is one advantage, or there is one option which is not a disadvantage. So you need to find that option. So reduces the communication between employees and management, reduces the time required for budgeting, may result in a budget that is not possible to achieve, may limit the acceptance of the proposed goals and objectives. So I've received a response from Syed and Pooja as B. Anybody else want to give it a quick try? B. Himanshu says B. Sakshi also says B. So okay, let's check it out. Yeah, it is correct. So what it says is that authoritative budget is a budgeting from a top down. That is, a senior management sets the budget and presents it to the mid-level managers to achieve their targets. Cool. Does anybody have a question on this? So if you want, I can just elaborate on that. Otherwise, we can quickly move on. Okay. Yeah, this could be a bit interesting. Maximilian Computer Company uses a comprehensive budgeting system in planning its operations, planning its annual operations. Which of the following best describes the information needed in order to determine the budgeted cost of the circuit boards to be purchased for the use in building its laptop computers? Assume one circuit board is used in each laptop. Take your time, take a minute or two, think over it, and it says the best, which of the following is the best option. So just make sure you understand. Is it accept the below, or is it like disadvantages? Are those the advantages? If it is like telling you the best option, just make sure you read the questions pretty wisely. Try to read it out. If you read the options carefully, what is given in the options is basically a formula, but it is given in words. So if you can convert that formula into a mathematical equation, you would be in a better position to answer that question. So when you get these type of questions, it is important for you to analyze each and every sentence. Okay, so what it says begin with budgeted laptop production in units. Again the same thing. Again the same thing. Again the same thing. So that is something which you can ignore. The only thing which you need to understand is what is a difference. And it says add the desired ending inventory to the circuit boards. Add the desired inventory to the circuit boards. Deduct the desired inventory of the circuit boards. Again deduct. So there are 2 deductions and 2 additions. So you need to first decide what the formula is, and then you can understand. Anybody wants to give it a random try? Like a really random try. A, B, C, D. Anything. Because this is also you need to understand, because you would end up having some questions wherein you need to give it a random try at the end of your exam, because there is a time constraint. Make sure you are like pretty habitual of analyzing the questions wisely. Anybody wants to give it a try? A, B, C, D quickly. So what it is telling you is to draft a purchased or a production budget, because it says starts with the production of units, right? So let's take the first option. Let's check the answer if it is incorrect. So what it says, to determine the budgeted cost of purchases, the number of units to be produced should be adjusted by the change in the inventory and then multiplied by the budgeted purchase cost. So what it exactly means is, if you remember, we solved one of the examples, like a partial example of that oak tree during the last session, right? And I told you that I'm much more familiar with. So Pooja said A actually. So thank you, Pooja, for that answer. So what it means is that which budget you need to apply in this question is kind of a purchase budget versus material usage budget. Why I'm telling you that is because if you analyze this question, it says best describes the information needed in order to determine the budgeted cost of the circuit boards to be purchased for the use of the laptop. So it's giving you a hint that you need to concentrate on purchase budget, and then you can probably compare all your options with kind of a purchase budget which you already have. So let me just quickly brief you again on what we decided last time. So we decided that there would be a sales budget first. Let me zoom in a bit. We decided that there would be a sales budget first, And then after the sales budget, there is something called as production budget. And then there was a budget which we combined, which was purchase versus, purchase oblique usage. And in the last class, I told you that I'm much more familiar with creating the account of that budget and then making the additions and subtractions onto it. So in any of the budget, what is going to happen is there would be an opening balance to it, there would be a closing balance to it, and the inventory is going to get adjusted every time. The only question is it going to get deducted or is it going to get added to it? Right? So for a purchase budget now, there would be an opening and there is a closing inventory. And then there is a sales, sorry, no, not sales, usage. And this one is basically the purchase figure. And now if you check what it says, begin with the budgeted laptop production in units. So you need to have a production budget in place before this. So you should always have a production budget in place. That's what it says. So what we decided was there would be a value coming from sales budget going to the production budget. And the production budget value would be then drawn to your usage. That's how you determine the usage. And from the usage, you get the purchase. So if you have this usage figure, you will get purchases. Right? It says, begin with the budgeted laptop production in units. So you have a budgeted laptop production in units right here. Add the desired ending inventory to the circuit board. So once you have this, you need to add up the ending inventory, this one, and deduct the expected beginning inventory. So you deduct the beginning inventory, which is this one, and multiply the resulting amount by the budgeted purchase cost per unit. So once you have the cost in place, number of units in place, then you can multiply it with the purchase amount or the purchase price which you have already decided. So this deduction would always be eliminated from your options. The only thing which you need to decide now is why A and B. What is the difference between A and B now? Right? So it says deduct the expected inventory and multiply the resulting amount by the budgeted purchase price per circuit board. Can anybody tell me what is the difference between these two lines? Anyone? So you can read the lines out, take a minute or so, and then tell me what is the difference between these two options. Anybody? No? So what it says is that the calculation of the needed circuit board should start with the budgeted production of laptops and not the budgeted sales of the laptop. So if you see, there's a difference between this. If you see this, there is sales in units and it says production in units. Because what we require is a purchase budget. So see what it says is because we require a purchase budget, we always need to start with production because that's the prior budget which we have. And for if it was for a production one, you would have started with sales budget. You start with production, you find how many units are required to be produced, you move to the purchase or the usage, and from usage you get a purchase. Okay, so I'll again do the question in a while, but then that's the answer which you have. So make sure you read the lines pretty carefully. Let's move on to the next one. It says a company operates on a calendar year but maintains 4 continuous quarterly budgets for up-to-date budgeting information. After completion of its 5 years long-term plan, the company's management decided to make a capital investment in new equipment. The equipment is expected to have a useful life of 9 years. Which one of the following is the most appropriate time period for the capital budget for the evaluation of the capital investments? So what do you think the budgeting time frame should be? What do you think what the budgeting time frame should be? It says 1 year because the company operates for a calendar year. Is it 4 continuous quarters because it says 4 continuous quarters right here? Is it 9 years because the useful life of the equipment is 9 years? Or is it 5 years because it's a 5-year long-term plan? Which of the following is the most appropriate time for a capital budget? Capital budget. That is one of the important keywords from the question. Take a minute or two just to find the things out. So just apply your common sense to it. So if it is a capital budget, then so I've got Himanshu saying A and Pooja saying C. So first of all, you need to understand what is a capital budget. So capital budget is a method. Sakshi also says it is A, that estimates the financial ability or the financial cost over the life of the investment. That's what the technical definition says. So let's just check it out. So I have 2 A's and 1 C's. Let me just put it A then. So it says A is incorrect because why A is incorrect? Because A is a calendar year that is maintained by the company. But the question says that which one of the following is the most appropriate time for the capital budget for an evaluation of a capital investment. So what is the time of the capital investment? So the time of a capital investment is 9 years. So the budget would also be for 9 years. So if the question would have said to you that what the time frame should the company use for its annual budget? So what the examiner will do is that he'll give you the same question, like this, absolutely same question. But the only thing is that the last line he will change it. So for example, if I tell you that which one of the following is the most appropriate for the company for its annual budget, which time frame, then your answer should be A. If the company is trying to make a budget based on its long-term plan, then what the time frame it should be? So it should be 5 years. If the company wants to do a budgeting every 3 months, which kind of a budget it should be following? So it should be following a continuous quarter budget. So capital budget depends upon the capital investment. If the capital investment is for 9 years, it would be the time frame should be for 9 years. So what it says is the capital budget covers multiple planning periods and individual investment needs to be evaluated for a period covering the entire useful life of the investment, which is 9 years. Cool. Budgets are necessary components of financial decisions because they help provide means to check managerial discretion, automatic corrective mechanism for errors, efficient allocation of resources, or means to use all the firm's resources. Why the budget is a necessary component of a financial decision? Why do you do a budgeting? So Syed says D. Cool. Anybody else with D? Is it a mean to check the managerial decision? Does it make sense? Or is it an automatic corrective mechanism for errors? Even if you have not studied budgeting, you should be able to answer this question. So yeah, Himanshu says it's B. So means to check means it's kind of a measure to check the managerial discretion. So Hemant Kumar also says B. Please read the options, guys. Pooja says D. Shiva Shaw says D. What, like multiple D's? So let me just. There is a difference between A and D. Okay, so it says means to use all the firm's resources. It says efficient allocation of resources. So there is a bit of a difference between it. So does anyone want to change the answer right now? He or she can. No. Let's check that. Yeah, it's D. See, means to check managerial discretions. What do you mean by discretion? Discretion means willingness. So why do you want a budget to check managerial discretion? You don't want that. It is not an automatic corrective mechanism. Why? It is not going to correct your errors. Your errors will get corrected when you do a performance evaluation through variance analysis, which is a part of budget. It is not included in the budget. So even in today's class, we discussed that there are 3 steps in budgeting. So planning, budgeting, and evaluation. So evaluation is the 3rd step, which is basically a variance analysis, which triggers after that. Budget doesn't help in kind of automatic correction of it. So none of the financial errors are corrected automatically. It doesn't matter if it is a budgeting error, forecasting error, planning error, or a costing error, or accounting error. None of the errors are going to get corrected automatically. And then it is not a means of managerial discretion. And we don't want to use the firm's resources, but we want to efficiently use the resources. So that is kind of a small difference between those two. All right. Okay, did I miss one question? Yeah, we missed this question. Question number 5, I guess. Yeah. Based on the past experience, a company has developed the following budget formula for estimating its shipping expenses. There is something formula which they have developed for estimating the shipping expenses. The company's shipments. Okay, did somebody message? Sorry. The company's shipments average is 12 lbs per shipment, and the formula is given below, which is shipment cost is equal to $16,000 plus 0.5 into lbs shipped. That is lbs is pounds shipped. The planned activity and the actual activity regarding the orders and the shipments for the current month are given in the schedule. Schedule is given to you. So planned and actual. And it says the actual shipping cost for the month amounted to rupees 21,000. The appropriate monthly flexible budget allowance for shipping cost for the purpose of the performance evaluation would be. That is the question. So the question is regarding your flexible budget, right? So we haven't solved any of the questions yet, but if anybody wants to give it a try right now, you can quickly give it, or otherwise we can directly move on to do with the calculation of it. So the calculation of flexible budget basically starts with the actual output multiplied by the estimated cost. If anybody can give it a try, take 30 seconds, give it a try. If not, I'll show you how this is going to work. So actual output multiplied by estimated cost. Okay, let's check out the answer. See what it says. A lot of information is given in the question, but information is not needed. A flexible budget is prepared at the actual level of the activity using the budgeted costs, that is the estimated cost, right? And determined at the beginning of the year. And the cost, whatever is the cost, which you determine at the beginning of the year. So what the point is, so you need to have the actual figures, that the actual output multiplied by the estimated cost. So if you look at the formula which says, if you write here, it says LBS shipped, right? So what you require is the actual LBS shipped. That's the only thing which you require. Why? Because you're calculating a flexible budget. So what does the flexible budget tell you? That the cost should be as per your estimation, but the output should be as per the actual. And that's what it says. So if you look at the question, it is not that complicated. On the other hand, you need to understand what is the meaning of flexible budget. So flexible budget, whenever it comes as a flexible budget to you guys, you need to understand one thing. It would always be, when you want to multiply something, it would be actual output. It would be actual output versus the estimated cost. The estimated cost figure. So an estimated cost would be given in your budget. So what is your budgeted cost and what is your actual output? So this would always be the price. So this would always be the dollar amount, and then you need to multiply it with your actual output. That is, this would always be in units. So if you see this is the formula given to you in the question. Will it always be the same? No, this is only for this specific question. I mean, the formula is only for the specific question. This is not a standard formula. Because this is their budget, that is your budgeted cost, and this would be your output, which is number of pounds which you have shipped. So 12,300 multiplied by $50 plus 16,000 is going to give you 21,500 right here. We have one more. We have a question on flexible budget. Let me just show you that. We have it in our notes, so that would make your concepts a bit more clearer. Is it right here? Yeah, so we have a set. So I hope you guys have a calculator with you, because you need one. So if you look at this, it says below is the income statement showing the actual results alongside the static budget, that is the master budget, and the flexible budget prepared for actual sales volume. Okay, so there is one thing which you need to understand is, see, the units, when we are talking about the units are basically as per actual. So if you see the actual figures, okay, so let me just take a screenshot. So if you see this, what I mean by that is what we decided was flexible budget, you need actual output, that is the actual units. So if you see that this is actual units, and then I said that you need to multiply it with the budgeted price. So you need to calculate the budgeted price. Can anybody calculate the budgeted sales per unit price? How are you going to calculate it? It would be, what is the budgeted sales price? Budgeted sales price. What was the budgeted sale price, guys? Was it 120? Can anybody figure that out? So what I mean by that is, for the cost per unit, you need to only concentrate on your static budget or the master budget or the annual budget. Now, if you divide the revenues by the unit sold, that is 2880, then 3 zeros, divided by 24,000, that gives you a per unit cost of 120. So that is your per unit budgeted cost, and you multiply that with your actual output. So it will be like this. So 20,000 was your actual figure, 120 was your budgeted per unit price or the per unit sale price. So you got 2400. You can do the same thing for your material cost. So if you want to calculate the material cost, what you need to do is, again, you need to divide this, which is 1440,000 divided by 24,000, which is going to give you 60, and then 60 becomes your estimated kind of a price. But then you always have the actual output, which is 20,000. So it will be 20,000 multiplied by 60, which is going to give you 12 lakhs or 1200,000. And similarly, you keep on calculating it. So if you get a flexible budget question in your exam, you only require two things. You require an actual output and the estimated price, what we call it as the standard price or the budgeted price per unit. This would be in dollars, and output would be in the units. Cool? Does anybody have a question on this? So how do you get the actual results? These are actual results. You just calculate it. It would be given to you in the question always. Nothing to be worried about. Nothing to be worried about on this part. This is the one which is going to give you kind of a hiccups. Just remember the basic formula, which is, again, I'm repeating it. Actual output, that is actual units multiplied by the budgeted price of that units. Okay. Once you do that, whatever figure you get is called as the flexible budget figure. Okay. So let's move on to another question. So even in this question, the same thing has been applied. This all which is given to you, all the information is basically irrelevant for your decision making, and you don't want to waste your time. So that's why what you do is you quickly jump onto your what is required, and then you can move on to the next thing. Sorry, I just missed a 7. So this one, which says Rock Industries has 4 divisions. In the quest to develop a more achievable budget for the coming year, the chief executive officer has elected to develop a company's budget by using decentralized bottom-up budget approach. So what do you mean by decentralized approach? It's nothing but the participative approach, decentralized bottom-up approach. So I gave you a diagram in this that there are 3 levels, and this is kind of an approach they're following from bottom to the top. Chip Jones is the production manager of one of its divisions. Joe's involvement in the budget process this year will probably. Where do you require Mr. Joe's involvement in the budgeting process? That's the question. So what is the important thing? The important thing is using the decentralized bottom-up approach. So if you see this, requires development of a production budget based on prior year's manufacturing activity. Does it happen that way? So if you see this, we have an answer with us right away, which says sales, production, and purchase. That's the approach on which the budget is being made, right? Then what it says is requires development of a production budget based on prior year's manufacturing activity. Then requires development of the production budget that is forwarded to the budget department. Negligible. It says negligible. You don't want Joe's requirement there. And then what it says is requires a development of the production budget after receiving the division's projected sales forecast. Does this line make sense? Syed says, okay, was it deleted? Okay. It requires a development of the product. So he's a production manager. So he's at this level. He's at the production level. So when will he start working on his job? Is when he gets the sales figures, right? Because after the sales budget is being prepared, you need to have a production budget in place. So until the sales budget is finalized, he cannot prepare a production budget. So one of the answer is B, so I'll just put in with B. But then just give it a thought once. Probably then until we can check the answers. Let's check it out. Chip Joes is production manager in one of the divisions. Joe's involvement in the budget process this year will probably require development of the production budget. Because he's a production manager, he requires a development of a production budget after the sales figures are there. Once he is done with that, he is going to forward this budget to the budgeting department. So even B answer is correct to a certain extent, but that is not the immediate step which is going to do. You can check it out, the explanation as well. It says Joe will develop a budget for his production department after determining how much is expected to be sold. That means after the sales budget. Joe will develop production budget and is forwarded to the budgeting department. However, first he will have to have an idea that how much to produce, how much would be the production budget. That's something which he needs to identify on a priority basis. Then again, this is something which is again important, which says all of the following would appear in the projected schedule of cost of goods sold manufactured except. So cost of goods sold manufactured, we didn't discuss that day. We did only for the material usage and the purchase part of it. But then, does anybody have an idea? Because the logic still remains the same. The logic would again be the same. This one is the logic. If it is cost of goods sold, See, the opening and closing are not going to get changed. The only thing is that the purchase or the usage figure would be something different for a cost of goods sold. So let me give you this. This becomes your COGS, and this becomes your production. Opening and closing would always be the same. All of the following would appear on the projected schedule of the cost of goods sold manufactured, except which is not going to get appear. So cost of raw material used, beginning finished good inventory, ending finished good inventory. So when you make this formula, you always have these two values in common. So these two values will always be there. Okay, this one and this one would always be there. That's what I think. What do you guys think? And then there is something called applied manufacturing overheads and the cost of the raw material used. So if you see this, I don't think that there would be manufacturing overheads coming in there. Let's check it out. It says the beginning finished good inventory. And why it is so? Because once you manufacture a product, the COGS, that is the cost of the goods sold, once it is prepared, there is the value which needs to go into this COGS. And this COGS value have multiple elements into it. And this doesn't include your opening stock. So let me just give you a brief example on this in a while. We only have 2 questions left. We can quickly finish this off and get onto the cost of goods sold aspect of it. Then the question says, a company uses a participative budgeting in order to more easily meet budgetary goals. The controller underestimates the amount of revenues and overestimates the selling and administrative expenses. What is this example called? So what is going to happen is, if he has underestimated something and overestimated something, it would create a variance at the end during the performance evaluation. So it cannot be a zero-based budgeting because he is not starting the budget from scratch. It cannot be the flexible budgeting because for that you require actual figures versus the estimate output figures. But then there are 2 things which you need to understand here is what is budgetary slack and what is budgetary variance. So what is a budgetary variance? So when a variance comes, it always comes with a difference. So you estimated your cost at 10,000 and you ended up paying 12,000. So it means that there was a negative variance of 2,000. So what is budgetary slack then? So if budgetary variance is going to give you the difference, what does budgetary slack going to give you? So it is the amount by which you're overestimating the budget. So it is the buffer, basically. So if you estimated a cost of 10,000, what is the amount of cushion you're carrying when you're moving into the actual figures? What I mean by that, what is the amount of variance you can tolerate? What is the amount of variance which you can tolerate? So budgetary slack is basically a kind of a nomenclature or kind of a practice where what you do is based on your estimates, based on your previous experiences, you underestimate or you overestimate few figures purposely. So what you're doing is you're creating a cushion, additional kind of a buffer. You know that this could go a bit plus minus because that's the trend you have been seeing. I've got an answer called A. So let's check it out. So budgetary slack is a practice of underestimating planned revenues and overestimating cost. What it says, underestimating the amount of revenue and overestimating cost. So that is something called as a prudence principle. Even whosoever is from an accounting background, they might be aware that there's a concept called prudence. You always record your expenses first, and if you want to record a revenue, make sure you have it in your kitty. So if you think that you're going to incur an expenses, just even if you think, you need to record it. But for revenue, unless you realize it, you cannot record it. So that's kind of a prudence concept. And on that concept, we have a concept called budgetary slack. What it does, it reduces your revenue and increases your cost. So it has nothing to do with selling an administrative thing. So even if it is not given in the question still would have an answer called budgetary slack. So it is overestimating the expenses and underestimating the revenues. So revenue should be lesser, expenses should be on a very higher side. Will it create a difference at the end? Yes, it will create a difference at the end. Will it be called as variance? Yes, it would be called as variance. Okay, then there's the last one we have, which says, which of the following best describes the role of top management in the budgeting process? Top management needs to be involved, including the use of budgetary process to communicate the goal, should be involved only in the approval process, lacks the detailed knowledge of the daily operations and should limit their involvement, need to separate the budgeting process and business planning process with two separate processes. Which of the following best describes the role of top management? What should top management do when it comes to budgeting? So Syed says it's A. Okay. Anybody else? Should the top management be only involved in the approval process? No. Should not be that way. Pooja says it's A again. So let's check that out quickly. Yeah. The more top management is getting involved, the more it is going to be in a better position to achieve its kind of budgetary goals. Okay, so let's end this session. So this is your kind of a summary of what we did. So whatever material you guys are following or whatever materials you have been provided with, you would be having similar kind of a dashboard or something, wherein what I will suggest is that it's better that you do not keep on revising the textbook every time. You keep on solving the questions. There would be multiple small concepts coming in every time. So for example, the budgetary slack concept, even if your answer is incorrect, just go to your book, just quickly read out that concept. If you understand it, it's fair. If you don't understand, just drop me an email or just tell me in the class that, okay, this is the concept which I'm not getting it. I'll be helping you with that. But there will be a few new concepts every time you would be having to incur. Then that is something which needs to be taken care of. But then the question which we got stuck on was the cost of goods sold. Until then, does anybody have any questions on that? No questions, everybody good? So the more you practice, the more easier it is going to be for you to crack the exam. Just keep on practicing it multiple times. So this was only 25 or like these were only 10 questions. But overall, if you see in this bank, there are, I guess, 121 questions. So if you see this, so this is 54, this 21, that makes it approximately 75 and then 46. So 75 and 46. So it's basically somewhere around 125 odd questions for one concept, for one kind of a full topic. So how do you crack your exam quickly? Make sure that you go with all the questions, you go thorough with all the questions. whichever material you have, just make sure you solve every question. Give it a try. Give it a try. And then the concept which you don't understand, the concept which you are struggling with, just write it somewhere in your notes. So for example, if I am not comfortable with COGS part, what you do is you draft a format and you write your query there. And you can always send it to me. That I was solving an MCQ, I didn't get this question. Could you please help me with the things? I'll surely help you with that. The moment you are thorough with these 120 or 125 questions, you should be able to easily crack the exam. And that is what is required. So your MCQ is going to cover all the hidden aspects of your concepts. Okay. So then okay. So budgeting methodologies, and we have got it in types of budget. Yeah, so it's right here. So can anybody tell me which material you guys have? Does anybody have an Hawk material, or which material you guys are using?
Sergeant, sir.
Okay.
I'm using Hawk, sir.
Okay, you're using Hawk. So Hawk has this example. I guess you should be. You should again. You can go to this page number 200 and always check it out. The example. So let's check how much time is left. Let's take a quick 5 minutes break, and we'll solve this question. And we'll try to prepare the whole budget right from sales to your COGS. And once you're done with that, we should be able to. Is it possible to get the Hawk material? I'm not sure if it is possible to get it, but you might be getting some kind of a material when you enroll with Uplift. So this one is kind of an old material which I'm using, actually, to be very fair. I mean, because I did my CMA using the Hawk material, I had this material in place in my account. That's why I have it. But for the other one, even the other materials are pretty good. I mean, all the materials have the same concepts into it. So like having a different material is not going to like make a lot of difference. The only difference would be the number of questions, but overall all these Hawk, Wiley, Sergeant, they basically are from the same branches of the same tree. So you should have the same questions coming in. Only there would be a difference between the name of the companies and all. But because even when I joined for my CMA, I was a bit worried, like it should not happen that the rest of the people have other material and I have kind of an other material. But then overall, I felt that it is not that relevant. You can just log into your material, and if you don't have any, if you want questions you want from me, is what I can do is I can always send you these 125 questions across a PDF with all the answers to it. So what it allows me to do is, so if I go onto my, okay, so for let me just give you a quick brief on it. Okay, so what it does is once I end of this session, it gives me a report, right? Like this one. So what can I do is I can always create a PDF of this and send the questions for like a quick review or something. So that can be done, but for that I'll have to just ask the Hawk coordinator to send the questions through. But I'll surely do that. Recently I did this with my buddy mentor class. They had some issues with EPS and they wanted more questions. So I have sent them the questions recently. If you see this, extra questions on EPS. So I had these questions from Hawk. If you see the date, it's 21. It's like 2 days back, and I've sent them all the questions. if they want. So always that is always that is always a nice thing which I usually do. But then if you want, I can always share that with you. So what we can do is we can quickly take a break of 5 minutes and we can come back. Okay. We'll just make sure you have your calculator and kind of a copy with you, so that we don't end up having uh, having trouble at the time of when we're solving the questions. Okay, guys, so let's resume quickly so that we can solve the questions. So, excuse me, this is page number 11. Yeah. Okay, so what we can do is we can quickly take up this question. Okay, so this is the same question which we did last time in the last class, but then we did it in kind of an Excel format. But what I'll prefer is that you might want to quickly draw kind of an account for it and then probably solve it. So that basically makes it a bit easy for you. Okay. So because we know the cycle of the budgets, which basically follows from sales to cash. So whenever in an MCQ question you get a budget. So for example, you got to get a purchase budget. So just make sure that you know which budget is the one which you need to prepare before that budget, and which one is the budget which you need to prepare after that. So that is kind of a formula which you need. Formula is the scope you should be always familiar with. We did discuss this, but just let me just put it that way. So it's sales to start with. Then there is production. Then there is COGS. Then there is a non-manufacturing or a non-manufacturing cost budget. And ultimately, what you get is your finance budget, and then you have got your cash budget. So this is a cycle which needs to be followed. Sorry.
Yeah.
Or did anybody say something?
What is the pending inventory budget?
Yes. So it is basically I'm putting it into production and other things right here. So I'm just giving a quick overview. So for the production part, there would be material then there would be material, under material it would be material purchase and usage. Then there would be a labor budget. Then there would be a manufacturing overheads budget. So this all comes into after production part, and plus your ending inventory budget. So it would be right somewhere in between production and COGS. It goes into this right here. And even in ending inventory, it is finished goods and the material part of it. So whenever you get a question, as I already mentioned, you just make sure that you know 4 elements which are involved in that budget. Once you know those, know that those 4 elements, you should be able to figure out the balancing part. So for the COGS part, you can just quickly move on to COGS. It is required. Yeah, so just give me a moment. Just take out the let me give you a quick pro forma for every budget so that you are aware of that, and then we can move on to the COGS. So for sales, what you need to do is you need to have a product, then you need to have that units and the selling price and the value. So make sure that you have these things with you when you have a sales budget. So you put on put all your products, put all your unit price, all the number of units for each product, the selling price, and by units into selling price, you should have your full total value for sales budget. So sales budget doesn't have kind of a complicated thing into it. But then the first budget which is made after that is your production budget. So just remember that the production budget would always be for products. So if your sale is for finished goods, your production should always be for finished goods. So you can quickly create a T format. There would be an opening balance which would be given to you. There would be a closing balance which would be given to you. And then there is this figure called sales, which would basically come from these units right here. This would be like this. Coming in, you have the sales figure with you right here. And what you get is finished goods to be produced. This is the answer which you get right here in the box. So once you're done with your production budget, so this is always related with your finished products. That is kind of an important thing. Then you move on to your purchase budget and usage budget. So it's usage and purchase. It would again have the opening balance and the closing balance, but this time it would be not for the finished products, it would be for your number of units which you have. So this could be kgs, this could be liters, this could be anything, any unit of your raw material. Again, you have got opening coming in, which would be given to you. Again, there would be closing, which is given to you. Now the question is, what are the other 2 elements in this budget? The first element would be the usage, and the other element would be the purchase. The usage is a dependent figure. The usage figure would always come from number of units to be produced right here. So it would come from the top. So if you get a purchase budget and you require a usage figure, make sure that you always have a production budget in place for that. Unless you don't have a production budget, you cannot find a usage figure. Once you have the usage figure in place, you can always add up these things and get a purchase figure. That is purchase, that is to be purchased. And because this is in units, what you need to check is that there should be two columns to it. So one column should be your units and the other column should be your value. So what you want, opening balance in terms of units, in terms of dollar amount. You want closing balance in terms of units and in terms of dollar amount. So for every 4 figures which you're going to calculate, it would always be units and value. If there are 9 raw materials, you need to calculate it 9 times. And when you calculate it 9 times, that means you're calculating 18 figures. One for the units, one for the dollar, one for the unit, one for the dollar. Cool. So for this one, it would always have a criteria given to you. What do I mean by criteria is that what is the raw material requirement for a finished product? So in the question, it would always be given to you that one finished product requires how many units of raw material. This would be given to you in the question. So raw material A, it would be given. It would be given for raw material B as well. And whatever raw materials you have, it would be given for every raw material. So once you have your usage and production in place, then, so this was the point we left. Basically, this was the point we discussed last time, and then we didn't discuss about labor and all. Then there is another budget which is prepared called labor budget. Labor budget is again sort of a similar format which you have for the sales budget. So it would again be the same, wherein you require product, units, hours, and the cost. Right? So what you require here is the product, you require the units, so you require units to be produced. How many units you are going to be producing, and from where you are going to get these units? But how many units you are going to get produced? This would be from, so this would always be from your production budget. So it says produced. You see this, there's a word called produced. So you go to your production budget. So this value would always come from your production budget, because production budget. And the production budget always has finished production or finished goods. It doesn't have your raw material into it. Then what you require is the hours. How many hours, or what is the hourly rate or to be required for that? So you require how many units are produced per hour, and then how many, what is the rate of freight per hour being offered. So it would be either way. It could be directly given to you. It depends, but then that's what you require. So let's say hourly rate is, assuming 20. Let's we can assume any figure. This would be like a multiplication going in. So you have units produced. How many hours are required to produce 1 unit? So this gives you the number of hours. And when you multiply it by rate, this will give you the dollar value. Cool. So there is one thing which you need to understand is the labor hours are calculated on units produced. That's what I've said. That is units produced from the production budget and not from the purchase budget. And not from the purchase budget. So you don't have to consider purchase budget here. It's not to be considered. Then there is something called as manufacturing overheads budget. So how do you calculate a manufacturing overhead budget? It has got three elements into it. There are three elements to manufacturing overhead budget. Fixed overhead, labor overheads, and variable overheads. So if it's a fixed overhead, there would be a fixed cost which would always be given to you in the question. So you don't have to calculate it anytime. It would always be given to you in the question. For the labor overheads, you require labor hours. And then what you require is a predetermined overhead rate. That is like a per hour rate which would be given to you in the question, but it would be for the manufacturing overheads. And then there is variable cost. Again, it could be given to you directly in the question, or you will have to calculate it based on the hours. Again, you have got labor hours, but this time the rate would be different. So there would be a different rate for labor overhead, there would be a different rate for variable overheads. So it would be a predetermined overhead rate. Can it be used to calculate fixed overhead? Yes, it can be used. But then almost all of the times it would be given to you in the question. Direct the cost of the fixed overhead. It would be given to you in the question. So you don't have to be worried upon that. Then you have got your inventory valuation budget. So this is something a bit more important. Inventory valuation budget. So what you do is, because whatever budgets you have calculated previously, all the budgeting figures you need to consider here. What I mean by that is you calculated your direct material, you calculated your direct labor, you calculated your manufacturing fixed overheads, calculated your manufacturing variable overheads, and you also calculated your manufacturing labor overheads. And all this is, so inventory is always of raw material. So what we are doing is we are considering for raw material initially, and then we will move off to the finished goods. So what we are doing is we are converting the raw material inventory into finished goods for this calculation purpose. So we use the raw material which is required for 1 unit of inventory, and we convert it into finished product. And once we have the final answer here, this would go into your COGS statement as closing balance of finished goods. So COGS is your finished product. Inventory valuation, you start from raw material, you end up at finished goods. Okay, so let me just quickly revise it once. So see, so your sales, your sales was your finished product. The sales which you have is your finished product. Then what you did was you always converted into a raw material required. So this was a raw material for finished products. Sorry, this one material usage. So this was a raw material. And again, everything what you required was a raw material. And then what you're doing is, because inventory is a raw material and that inventory value is going to go into a COGS, you cannot just add up the values, because The inventory is based on your raw material. COGS is based on your fixed product, finished products. So there's a difference between a direct adding up. That's why what we need to do is we need to convert your raw material figures to your finished goods figures. And how do you convert that? There would be a conversion given to you in the question. The one which we did in this material usage part. So this conversion you need to use every time to calculate it. So whatever is your closing inventory, you will have to use that value. So if you're closing inventory for direct material and you've got 3 direct materials into it, A, B, C. So if A is 10 units left, B is 12 units and C is 15 units. So these are the raw material units left. For every 1 unit, you require some kind of a finished product conversion, which will be given to you. And then you multiply by the value. And that's how you get the closing inventory for 3 products. Once you have that, you can always go down by adding up all those figures and get a COGS. And then you have got a COGS budget. So when you calculate a COGS budget, it would be opening balance of COGS, the closing balance of COGS, the cost of COGS, and the answer would be your production. So the closing balance of your COGS would be your balance from your closing inventory. So this closing balance which you need for a COGS would come from your inventory. Then once you have this, you can move on to your other financial budgets. So opening would be from the past year. Closing, you calculate it. How do you calculate the production and COGS? The production would be calculated from your production budget. And this would be again your balancing figure. The final COGS which you require would be from your balancing figure. So this would come from production. So once this is done, you calculate your non-manufacturing overheads. How do you calculate it? The same way you calculated your manufacturing overheads, in the same similar manner you calculate it. So once you're done with that, you calculate your cash budget after this. So cash budget would be your opening cash balance plus your receipts minus your disbursements, and then you get your net cash or net closing balance. This would be for period 1, period 2, period 3, and the closing balance would automatically become the opening balance for every budget. So this is kind of a rolling budget which we're talking about right here. So this is kind of a budgeting process. So all these budgets you need to be familiarized with so that you can solve those questions. The only thing which would be asked to you in your MCQ questions is the balances basically. So you always focus on a single budget and what are the elements. So if you refer to your notes, you would be having a formula for every budget. So the formula for COGS budget or probably a manufacturing budget would be the opening plus closing and minus the sales, depending upon which kind of budget you're using. But then every budget would have its own formula. So for example, for the material usage budget, the formula would be the closing value plus usages minus the opening value. So this would be your answer. Again, you can do it the either way. You can always do it in the T format, or you can always do it in a formula based kind of a thing, whichever suits you. Now, if you see this, just give me full budgeting aspect of it. So what you do is you go to your Sargent or your Hawk material, and there is this question on page number 211 onwards. You solve these questions fully. So it has got every budget which we have covered. It starts with your GS budget. So if you see this, there's a formula given to you in your COGS, which is beginning cost of finished goods inventory plus beginning cost of goods manufactured is equal to budgeted cost goods available for sale. Then you minus the finishing inventory, and then you get the COGS cost. Same thing, you can always do it in your T format, which is kind of an easy way for me, but then it could be different for you guys. So what I want is you solve this question. So, or even if you have a similar question in your Sargent material, you can always refer to that. But then if you want me to share this question, it would be a bit more, because I'll have to keep on snipping it every time. So is there anybody who doesn't have this question in their material? Okay, so who says that? Pooja says I don't have this material. Okay, Pooja. So what I'll do is I'll have to snip the things, and I'll share the question to you. Anybody else who doesn't have it, probably. So even if you have your Sargent material, so it says I do not have to. Okay. So I too, Himanshu also. Okay, okay, fine. So this is not in your Sargent material. I was told that this is there, but okay, let me just check it out quickly then, because what I am assuming is that you guys have this question, and that's why I'm not solving it completely. Okay, so give me a moment so that so what we can quickly do is yeah. So what I'll have to do is I'll have to snip all these things. How do I do it? So yeah, so it is right here. So whatever budgets we discussed basically are, I'm referring to these budgets which are given in these questions as well. So when you go to operations, so this what I'm talking about is the sales. But when you talk about sales budget, you see this formula or see this format here. So for that, what I'll have to do is I'll have to quickly. Okay, what I can do is I can share you the snips. So this is a sales budget, this is a production budget. Then there is a direct material usage budget as well. Then there is this downloadable somehow? No, I guess. Okay, so what I'll do, I'll quickly create the snips, I mean, of these budgets, and I can share these to you guys. So what I want is you just solve these questions once. I'll give you the whole thing basically, right from the material to it, because there's something which is going to come in your exam. So let me check if I can just copy this the whole way. Pooja says I have sergeant material for part 2 only, not part 1. That's why these questions are not available. Yeah, so it is into hawk material. So I mean, there would be some similar questions into your other materials as well. That's what I'm actually hoping for. But anyways, that's not a concern as of now. Let me just quickly check if I can. So that's how it should be working. No, it is not going to come in the same format, to be very specific. Okay, so what I'll have to do is I'll have to manually keep on snipping it. So give me some time. So you can expect the answers by probably. So what's the time there in India? So it's 7 o'clock. You just expect the answers by 8 o'clock. Okay, within 1 hour. What I need is that I want you guys to drop your email IDs in the chat box, so that I have the things in place. So I guess I have for Pooja, but still Pooja, if you can just drop your email ID as well. Whosoever want these questions, you can just tell me. I can quickly drop those things to you. So you can drop the email ID in the chat box quickly. I'll share you the snips. So it says pooja@gmail.com. So I do have some of the email IDs with me, but then let's just keep it a bit formal. So guys, if you look at the material, it has got 6 sub chapters to it, 6 concepts, and every chapter, for a basic overview, there are 2 days dedicated to it. So that makes a calculation of 12 sessions. Okay, and then for the remaining sessions, what we can do is there would be a mock test in every session for 1 hour. So this would be around approximately 15 sessions, like 15 Sundays, 2 hours each. And then for the remaining 15, it would be more of a like an MCQ thing which you're going to solve practically. So what I'll suggest is I'll share you the details, and till then, until next Sunday, what you do is you practice these budget questions, and whichever material you guys are having, just make sure that you have started practicing the other MCQs which your material provides you. There would be a portal in your material or something which would be guiding you towards kind of an MCQ thing or something like that. Just let me know, just check if you have it. If you don't have it, just connect with me, you are in that group as well. You can just ping a message there that I require some questions on budgetary concepts. I require some questions on any of the concepts. I can immediately forward you those questions. Okay, so the more you solve it, the more better you are to cracking the exam. Is there anything else you guys want me to like tell you or something? The budgeting is kind of a relaxing chapter. I mean, it doesn't have interesting topics, but the next chapter which we are going to do is your marginal costing, which is basically quite interesting and has a lot of practical questions onto it. So budget was more of theory versus a little practical, but then the CVP analysis is more into practical thing. So is there any specific questions? Because I'm done for the day. No questions. Okay, guys. So happy Sunday, and I'll see you in the next class then.